Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Thursday, November 17th, 2022. And our top story today, has ESG investing lost its halo? Well, joining me now to discuss this and a lot more, Bob Collie is the founder and principal of Collie ESG. Well, Bob, it's great to see you again. Thanks so much for joining us on the program this morning.
Oh, it's super to be here. It's been a while since we spoke, so it's good to be back.
Yeah, it has been, and a lot has transpired in terms of what's happened in the UK and also pensions. And there's a lot of things I would love to unpack with you maybe in another segment. But today I want to refocus on ESG and sustainability. And as you know, this week was the day of 8 billion. So we have 8 billion people on the planet, even underscoring the need for sustainability, ESG, and sustainable solutions. But let's talk about recent events. We've had a down market for the most part, not where it was in 2021. But has ESG investing lost its luster? Is that halo gone?
No, obviously. But I think what has changed is maybe ESG's status as kind of as the hot topic that everybody's rushing into. And so this kind of, it had this, I don't know if excitement would be the word around it, but it was the hot thing that everybody was just rushing into. Probably we're moving to a more mature position now where people are thinking about what is this really about? What's the reality behind it? How do we do it properly? And so maybe more sensible questions are being asked, and it's losing its status, it's not so much losing the halo as maybe losing the position as being a fad. It's now moving into something that's establishing itself, and best practices are becoming clearer. So it's certainly maturing. There's definitely a change, but I think it's here to stay in the long run.
Yeah, and it's Bob, it's really different than, you can't lump it in the same category as cryptocurrency. Of course, that's in the news this week and late last week because of the FTX debacle. But again, very, very different. ESG investing, sustainable investing, environmental investing, however you want to define it, has been around for decades. And so you're right. I think it is from my perspective, it is a maturing market. And with a maturing market comes answering questions like data, transparency, performance, all the things that as investment professionals we talk about and you talk about with clients on a regular basis.
Absolutely. And so that infrastructure, so you mentioned data and that infrastructure, as companies report more, we have more idea of who's really having an impact, who's really making a difference, and maybe who's creating problems for the communities around them. And there's a recognition, and this is what's really going on in the big picture with ESG. There's a recognition that if you're doing something that's, whether it's pollution or whether it's causing disruption in society, whatever it's doing, if you're having a negative impact around you, that is going to impact your financial performance, and investors need to know about it. You go back 20, 30 years, if you were abusing your supply chain and there was all sorts of bad things going on, we wouldn't necessarily have known about that except in one or two very unusual cases. It's much, much harder to hide that now. There's more transparency. So as that data becomes available, investors start to say, hold on a second, I don't want to invest in the next Enron, the next whatever it is. So I want to understand the environmental performance, social performance, because it matters to me financially. And that's the single biggest thing behind the growth of ESG. It's not that there are kind of this woke agenda that's trying to force this into how people are behaving. It's firstly about the financial performance. Then once you've put that in place, there's a very interesting debate about, well, do we want to pursue other objectives? Are there things that we might want to do around emissions, climate change, and so on? And that then becomes a second level of conversation. But first and foremost, most of what's been going on here is just good old-fashioned investment risk management behind it.
Yeah, and that's it gets the buzzword ESG, but you're right. It's about risk management and how do you manage your business most effectively so you're not impacted by some of the negative things that you mentioned, or even imbue the positive things that are going on. Let me ask you, Bob, last question for this segment. And with any market, there are always bad actors, and it's easy to point fingers and say, we've heard a lot about greenwashing, which is basically saying you're doing something and not doing something. But this is something that the market tends to kind of clean up on its own, and then regulators look at this and say, okay, well, just like if you have a large cap growth fund, as an example, if you're not adhering to the mandate of the fund, someone's going to call you out on it, and not only will performance maybe not track, but someone's going to call you out on it, and you're not going to get selected by a pension and endowment or some other asset pool. So these things tend to regulate themselves, I guess, is my question.
To some extent, yes. Unfortunately, that doesn't happen instantly. People can get away with bad behavior for a while, but you're right. At some point, misdeeds catch up with you. You can't hide forever, and so. Yeah, we could have a long segment on greenwashing. It's not nothing, but neither is it a reason to throw out the baby with the bathwater and say the whole thing's a load of nonsense. It's definitely one of the areas which, as this sector matures, we need to deal with better.
Yeah, and the reason why I bring it up is, you hear the one-offs where a financial advisor dupes a client, churns an account, whatever, gets caught by the SEC, gets slapped on the wrist, pays a fine, maybe loses their license, but you don't brand all financial advisors, of which there are probably thousands, if not millions in the world, as being nefarious, right? So the same thing, I think, applies to ESG and investing. They're going to be bad actors. They're going to get their hands slapped, or they're going to get in trouble. But it's about as you said, sifting through the data and picking the right investment vehicle for you.
That sounds pretty smart to me.
Well, there you go. See, I learned from you, Bob. Bob, I want to take a very quick break. When we come back, should you embed ESG into your strategy as a startup? You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking this morning to Bob Collie of Collie ESG. Bob, thanks so much for sticking around with us for segment number 2. Great to catch up as always.
Oh, likewise, it's a pleasure. Always a
All right,
pleasure.
Bob, we had a great conversation in the first segment about ESG investing. The luster's not off of it. Yeah, it's a mature market. But let's talk about if you're building that startup, if you're a fintech, if you're doing some other startup that maybe is in healthcare. Should you take ESG principles, the things that we're talking about and talked about in segment 1, and apply them to your startup? Is it worth starting early rather than coming back and trying to change your culture after the fact?
I think you've hit on exactly the right word there when you said culture at the end, and so much of this does come down to what is the nature of the firm, what are you trying to do, and who are you as a firm. Where the startup obviously has a huge advantage over a bigger company is you've got that blank sheet of paper, and you can, and if you're setting the rules from day one and you understand here is what we stand for, and here's how we're going to behave, this is how we're going to treat our staff, and there are lots of different cultures that might be valid. So some companies will just flat out say we're about winning, we're competitive, and that's what drives us, and that's going to attract a certain type of employee, and those employees will thrive there, and it's going to attract a certain type of company, of customer, and it's going to be a certain type of business. And so that's one culture that we see. Another culture would be, no, we're very supportive, associates first. And if you look, I worked for a long time at a company which explicitly told us we will look after our associates, our employees, on the understanding that they will then look after clients. And so the associates were actually put ahead of the clients in that company's culture explicitly. And the clients that we worked with were very happy with that, because they say, we know that you'll look after us because we want to work with people that work well. So there you have different types of culture, and a startup should think very clearly, because if you're not being conscious about the culture that you're trying to form as leadership, you're setting that culture nonetheless. You know, it's not like a business strategy where you can say we're going to do X or Y, but it is just as strongly the case that the culture of the company is set by the leadership and the tone, and everybody else will follow on from that. So I think it's a huge deal for any startup to understand what it's doing and to behave in a way which is deliberate. ESG is part of that. What you shouldn't do clearly is try to establish a 45-point code that covers every eventuality. You start with the ones which are the biggest in your context. What are the key things for the business that we're in? What actually matters? What's material? And for the type of firm that we are. So you pick those key elements to start with. Over time, it's going to become more complex. You're going to add to it. But if you start simple and focused and honest, then that's a great place to begin.
So Bob, I think you make some really great points about starting at the beginning with great governance and incorporating these principles. A lot of startups, though, aren't bootstrapped. A lot of them have funding from venture capital or some other source. Do you have to, I assume, but I would assume you'd have to vet from whom you're getting the money to make sure that the VC or the venture firm is in alignment. So this is where it gets a little trickier, right, Bob? Because money talks oftentimes, and it can cause you, look, we hear a lot of the stories, it'll cause you sometimes to go astray from your own principles.
Yes, and again, you're hitting on some great words, culture earlier, but then that question of alignment, where a startup has a big opportunity to really thrive is if you can get a complete internal alignment between everybody involved, whether that's the funding partners, whether it's management, whether it's the workforce, and to the extent that the client base is on board as well, so much the better. And that's the benefit of a really strong culture and a really clear culture is you're more likely to have that alignment, and alignment really does lead to greater success because you've got people pulling together and people seeing the world the same way, which is a huge advantage. On that, there's one phrase that I've heard. I'm not sure the origin of this one. I didn't come up with it myself. But with any policy, you want that policy to be known, trusted, and applied. So how is it we do things? You want everybody in the firm to know what it is. You want them to buy into that, and then you want them to do it. And that's key around the ESG elements, but so many other aspects of culture as well.
Bob, I guess last question. When it comes to these venture capital private equity firms, are you seeing more of them take on the ESG principles? So what I was describing is making sure that there's alignment. Maybe that's not really the case anymore, because are these firms adapting because they're seeing people they don't just want ruthlessness and dollars. They're about a little bit more than that. So we've got to align ourselves.
Depending on the market they're aiming at, I think you'll see that if you're going at a broad consumer base, a retail consumer base, you nearly always, unless you really want to buck the trend, you're nearly always going to want to position yourself as being that type of company. That's the mood of the times. I think some other markets you can maybe get away with a slightly different way to position yourself, but that seems to be the way that the world's going in many regards.
Yeah, well, sometimes, the world is both large and small businesses, and small businesses often lead a lot of change. And so this is an area where they can make change in the industry that they're in, but they can also make change when it comes to governance and having principles that are appeal to not only the employees, but also the clients. Bob, we're going to leave it there, and I should say the investors. We're going to leave it there. Thanks so much for joining us, and we look forward to having you back on the program again very soon, my friend.
Thank you.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more, and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? We'll visit our website, and of course, all of our streaming partners. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.